Hi, and welcome to Easter Sunday Night Charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steve Van Meter. Thanks for joining me today. Moving averages 50-day. The color on your screen is green. 100 days blue. 200 days tan. Price versus momentum prices. General direction prices are headed. Momentum is a rate of change. A bullish indicator for both as positive and bearish indicator for both as negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break. Support is a level sellers can't break. Or resistance where sellers are at. Support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get right into the S&P 500. Of course, we should see some bullish changes on price. We did. Annual momentum on short-term went bearish. Imagine that won't hold very long. Because as you know, the S&P 500 has had a nice bounce off its 50-day moving average. It's always the question is, you start to see tops where it will bounce off the 50-day with a little less momentum, but hey, people want to buy at all-time highs and go higher. And well, they've got their money where their trades are at, and they're driving the S&P 500 higher. You can see on the SPY where we have the volume profile, 390 is a level of or thereabouts is a level of support. But right now, the ball is firmly in the hands of the bulls, where it's been for a while. Nasdaq 100, kind of similar story. Price has switched bullish on ultra short-term and short-term. Intermediate term remains bearish, and momentum unchanged. Let's take a look at the Qs. And finally, back over its 50-day moving average. The 100-day for the Nasdaq has been a stronger level of support. And it did bounce off that, got through some of this heavy trading resistance here with the help of a gap up overnight move. I don't know why algorithms are able, that's something really cool. Algorithms are able to gap up over the heavy resistance, kind of like jumping right over your defenders and scoring a touchdown, and back over the 50-day. Long ways to go up here. Not a lot of trading volume to slow it down, but still a long ways to go before the Qs get to new all-time highs. Support remains right there around 312. And let's take a look at small caps. We got the Russell 2000. No real change here. Indicators still bearish across the ultra short-term and short-term. Those usually don't make me change my mind on something until you see the next level flip. And sure enough, small caps, this still is looking like a topish pattern, because you have a higher high and then a higher high, and then it just runs out of steam. It just like whoop and down, up and down. But look at where support is at, and this is where how topping patterns start to form, is they form around a certain area as price continues to bounce off of them. So support remains right around 213 on IWM. It did cross over its 50-day, which was bullish, but it's running right into another level of resistance. Let's duplicate this line. And you can see this volume profile area right up in here has been and remains to be a strong level of resistance. So small caps will need to bust through that to get a shot at back at all-time highs for sure. But again, ball's firmly in the hands of the bulls. How about the energy sector? Small change there. Overall picture with the energy sector is there's going to be further production cuts out of OPEC+. That remains bullish. Although for the U.S. consumer headed back to work, higher oil prices, higher gas prices, not too bullish for them. XLE, we've talked about how the path of least resistance is up to around 55.50. It hasn't gotten there. It got clogged into some resistance here now at 49. It's looking like it's holding that. It feels a little toppy, a little left shoulder, a little head, a little right shoulder going on. Still above its 50-day. With the OPEC cuts from or production cuts from last week, I would imagine this trend remains bullish. Let's take a look at crude. Crude keeps running into resistance here at between 61 and 62. So the resistance here in crude is becoming your resistance on the XLE, and you can see this looks like a topping pattern. Left shoulder, head, right shoulder forming there. But again, everybody's super bullish about the economy reopening, jobs coming back. So we'll see what Monday brings, because kind of unusual. We had a data release on the day the markets are closed. The bond market, at least the futures, are still open. Let's see. Financials, XLF, no major change here. Let's take a look at XLF and see what's going on. Where is it? Up here. I think I'd remember, right? All right, so we're starting to see some overhead resistance starting to form where this volume profile is at. So XLF, we're stuck right at resistance. Now remember, XLF is going to trade inverse bond prices or similar to Treasury yields. So if we look at 30-year yields, you'll notice that it's looking like it's got this kind of topping pattern. It was breaking down. On Friday, there was a pushback up in yields to right at around this trend line as that. But back to XLF, you see kind of a similar topping pattern starting to form, run into resistance here. So if you see XLF roll over, well, guess what? That means Treasury yields are also going to head lower with that. And let's go on to the utility sector, which is kind of a mixed bag. We have a little change in annual momentum, little change in price, back to bullish. Let's go check out the utility sector, because this was kind of interesting. It was bouncing. See, it was bouncing between resistance and support, and it broke through resistance. Not a lot of overhead volume here to slow it down. This would suggest, because it broke through here, that utilities are headed now back up in here to the $65 range. Would make a run at that. It seems likely that this would happen based on what we're seeing with the volume and breaking through that overhead level of resistance. Industrial stocks pretty much unchanged, remain bullish there across the board, almost, but close enough. Gold mining stocks. Now, this is interesting. We see short-term price went bullish, annual momentum flip bearish across the board. 1 month, 3 months, 6 months, 9 months, all red, meaning they are negative and falling on a momentum scale. That is not pretty. Remember, that's where TLT's been, and no one likes TLT except, well, your host, the Bond King. Let's take a look at what's going on with GDX, ramming right into this level here of resistance. It's perked above its 50-day moving average, but we know the 50-day has been just this consistent level of resistance. Even when it gets over it, it comes back down. The direction that I see for GDX is it rolls over, breaks to 31, but it's not going out without a fight. It's fighting this 50-day moving average, fighting this level of resistance. There's lots of trading volume here right around 33.68. So look for this to come to a quick stop. If it breaks through, then you've got the 100-day moving average, but your major level of resistance is going to be at 35. But given where the 50-day has been at with this picture, I would say don't look for much more upside in GDX. How about emerging markets? Once was the darling of the market, looking like it's going to head the other direction due to the dollar. Bearish, no change on the price, annual momentum, short-term flip bearish. If I see annual momentum here turn bearish, and we got all red on these 3 rows, you get my attention, especially if you see this 3-month momentum flip and turn. Some of the things I'd want to see to go outright bearish on this. You see this topping pattern, and it broke through, back up, forming potentially another right shoulder. So you have left shoulder, head, right shoulder, smack right dab into heavy level of overhead resistance, rejected there. So can this roll over, or are we going to make another run back at this next level overhead resistance? Being that I'm dollar bullish and bond bullish, I want to see this roll over. That's my confirmation biased opinion on EEM. All right, let's move on to TLT, and holy smokes, look at that. Ultra short-term bullish on price and momentum. Don't worry, that doesn't get me very excited when that changes, but what does is a 1, 3, 6, 9, and 12 are all negative and rising. This is one of my best signals at a change, is when these all turn. And now we're seeing that, and what we can see in the weeks to come is these may bounce a little back and forth, but if the overall is they're negative and rising, and then the 1 month turns green, that is a very, very strong indicator. Let's take a look here at TLT, and we can see that it's starting to find some support here, and there's a bit of trading volume where it's holding, again, based on what we saw in the early morning on Friday after the payrolls. There should be a little pullback that might just erase itself by market open on Monday. There is overhead resistance right here at 139. Break that, and you'll notice there's not a lot of volume now to move through between up to 152. If you look at TYX, you see here's 2.2%, get a little bit under that, and there's smooth sailing all the way down to 1.8. There's not a lot of trading volume there to keep the bond market in check. And there's a lot of shorts in here, especially in the overnight. So a move over 140, and we're seeing those momentum signals say, yes, there's a push here. There's a good trend change here. So I like what I'm seeing, very early indicators that the bear market in bonds is over. How about high yield bonds? Price is now back bullish. Momentum flipped a little bearish there. And otherwise, no changes on that. Let's take a look at high yield bonds. And you see there's just been a lot of sellers right up here, this 87, to almost, just looks like mostly in the $87 range. So you can see, people wanting to buy in here, and sellers are like, nope, nope, nope. And you got to remember, when you look at high yield bonds, if they don't break out of this topping pattern up here, that eventually says they roll over head lower. And so you're seeing just nothing but selling out of junk bonds here. Obviously, there are people that want out of those and are letting all the people that are very bullish on the market have at it. How about gold? Bearish across the board. Very ugly picture for gold. Remember, this is what TLT looked like at one point when everyone said it was going down and down more. But when it's gold, people don't see it that way. See a little different picture. You now see a potential double bottom at 1687 rammed right into overhead resistance. Again, this is going to play a role in GDX too. Gold doesn't get through here, but bulls all over this last 2 days and ran into resistance. I still see this rolling over. You're seeing kind of what this pattern was a year ago, where it's bounding between this upper and lower bound, 1687 to 1750, and before it resolved higher. But this time you're seeing sellers, likely direction resolves lower. How about silver? And this is changing too. Not so much on the price or annual momentum, but the 3-month momentum here is negative. And let's take a look at silver. And it's at a critical juncture of support, this 24 range, where it's found buyers before. You see this heavy volume here, and for good reason. If you're bullish on silver, you need to defend this, because if you don't defend this $24 price level, there's not much between you and the next level of buyers, which aren't a lot of them, down here at around 1783 or so. So silver looking very topish here as sellers continue to dominate, but buyers hold the line at 24. Can they keep it? That's the question, because one thing that's coming for everybody is the dollar. Now look at this, bullish across the board on price and in momentum, bullish almost except for the long term. 3-month now turned green. 1 month I believe is green. 6-month, 9-month, 12-month, all negative and rising. This is what you want to see from momentum and price, telling you that something is bottoming and moving higher. And there you have the dollar. Beautiful picture on this. Let's look at the volume profile on UUP. So this is still telling us there's a bit more to go before we hit overhead resistance. That would mean you're looking at 94 on the DXY, but you got the 50-day crossing the 100-day. That's a bullish signal. You're stuck in the middle of this supply zone. It's possibly going to tag its 200-day on the downside. Maybe it holds right here. What we find interesting here is when it's gotten up at this level and been rejected, it's gone back down to 92. If it doesn't get down to 92 and holds this 200-day or holds where it's at now, look for a run at 94 before you see sellers come out. But after that, well, let's take a look at UUP. Oh, there's not a lot of trading volume until you get up to this zone here. Well, where does that map? Oh, yeah, that's at 97, between 97 and 98. I tell you what, the equity market does not see this coming. Risk assets do not see this coming, but you do. And that's all that matters. I'll see you on Monday for the macro show. Happy Easter. Bye now. The content of this video is provided as educational information. It's not intended to provide investment or other advice. It is not to be construed as recognition or solicitation by or selling security, financial instrument, or to participate in any particular trading strategy. So, was paired by Steve Van Meter. Personal capacity opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steve Van Meter Financial.